Module 1. Charitable Organizations and Tax Exemptions. Overview of tax-exempt organizations. Section 501 of the Internal Revenue Code provides the framework for domestic exempt and charitable organizations. Section 501A exempts certain organizations from the obligation to pay income taxes under the code. Generally, these organizations are structured and registered as not-for-profit corporations under their state's laws. Organizations that qualify under any subsection of 501 are not subject to federal income tax. There are exceptions to the rule, and even exempt organizations are taxed on income earned from activities, trades, or businesses that are unrelated to its exempt purpose. For example, a social club that is tax-exempt under 501c7 may receive unrelated business taxable income from activities such as selling food and beverages to non-members or accepting paid advertising in club newsletters or other publications. This income would be taxable. Depending on the type of exemption for which an organization is eligible, it may also be exempt from payment of federal employment taxes. Also, the type of exemption may affect the availability of grants and determine how the organization is treated under state tax laws. Exempt organizations are generally created for public service, mutual benefit, or religious purposes. Public service organizations, the most well-known type, are typically organized for charitable purposes that will benefit the general public, such as providing social services, educational programs, or artistic endeavors. Public service organizations are generally exempted under IRC Section 501c3 or C4, and contributions to these organizations are deductible if certain requirements are met. By contrast, mutual benefit organizations are created for the benefit of a specific group of people. They include social, fraternal, and recreational organizations, such as unions, business chambers of commerce, and homeowners associations. The operating resources of mutual benefit organizations generally come from fees and dues of members in addition to any fundraising activities. By far the largest group of nonprofit organizations in the United States are those organized under Section 501c3 of the tax code, whose purposes include religious, educational, charitable, scientific, literary, testing for public safety, to foster national or international amateur sports competition, or prevention of cruelty to children or animals organizations. Other exempt categories under the code include 501c4, civic leagues, social welfare organizations, and local associations of employees, 501c5, labor, agricultural, and horticultural organizations, 501c6, business leagues, chambers of commerce, real estate boards, etc., 501c7, social and recreational clubs, and 501c8, fraternal beneficiary societies and associations. Additional categories of exemption under 501c include congressional corporations like federal credit unions, domestic fraternal societies, teachers' retirement fund associations, state-chartered credit unions, mutual insurance companies, posts or organizations for current or former members of the armed forces, and state-sponsored organizations providing workers' compensation reinsurance. Exempt status may also be available to religious and apostolic associations, cooperative hospital service organizations, certain child care organizations, charitable risk pools, and not-for-profit credit counseling organizations. Farmers' cooperative associations and political organizations may seek exempt status as well. 501c3. Charitable organizations. All organizations seeking exemption under Section 501c3 of the Code are either public charities or private foundations. Public charities that qualify under this section of the Code are exempt from federal income and employment taxes. In addition, individuals donating to these organizations may take charitable contribution deductions under Internal Revenue Code Section 170, which exempts contributions to community chests, funds, or foundations organized and operated exclusively for charitable, religious, educational, scientific, or literary purposes, or for the prevention of cruelty to children or animals, which constitute charitable organizations exempt under 501c3. These contributions may also be deductible to the donor for gift tax or estate tax purposes. As a result, tax-exempt status under 501c3 is highly desirable. It not only relieves the organization from the payment of taxes, but allows it to solicit donations that are tax-deductible to the donor. Donors looking to make a charitable contribution, whether outright or through one of many tax-related devices such as charitable trusts, are more likely to seek out organizations where their money can earn them tax savings. In addition, many grants made by foundations, state agencies, or the federal government are only available to 501c3 organizations. Many states only exempt 501c3 entities from state income, sales, and property taxes. These benefits are often not available to organizations exempt under other sections of the code. Unless exempted from the requirement to apply for tax-exempt status, an organization seeking exemption under Section 501c3 is required to apply for recognition of exemption by filing Form 1023, Application for Recognition of Exemption, within 27 months of the date of formation, to be treated as exempt from the date formed. 501c3 requirements. An organization seeking 501c3 status must satisfy certain requirements, including the organizational and operational tests found under the code and regulations. To pass the organizational test, the entity's governing documents must meet the following qualifications. A. The organization must be a qualified entity such as a corporation, community chest, fund, or foundation. A charitable trust is a fund or foundation and can qualify. An individual will not. B. The organizing documents must expressly limit the organization's purposes to the exempt purposes listed in Section 501c3. The organizing documents must not expressly empower the entity to engage in activities that are not in furtherance of one or more of these purposes. C. The organizing documents must permanently dedicate the entity's assets to an exempt purpose and should contain a provision ensuring their distribution for an exempt purpose in the event of dissolution. To pass the operational test, in its day-to-day activities, the organization must meet the following requirements. The organization must engage primarily in activities that further its exempt purpose as a public charity. The presence of a single non-exempt purpose or private benefit, if substantial, can destroy the tax exemption regardless of the number or importance of exempt purposes. B. The organization's net earnings cannot inure in whole or in part to the benefit of any private shareholders or individuals. C. The organization must not be an action entity, meaning it should not engage in political activities or campaigning, though it may engage in insubstantial lobbying activities. In addition, the organization must not violate public policy. This requirement is implied by the statute, if not stated outright. The organizational and operational tests provide the procedure for determining whether the organization is pursuing an exempt purpose. The organizational test is easy to satisfy, as it applies primarily to the organization's formation and determines whether the organization's stated purposes and powers in its organizing documents are in keeping with the code and regulations. The operational test, on the other hand, focuses on the organization's activities to determine whether it is, in fact, fulfilling its stated purposes. The determination is a factual one, with regulations and case law providing guidance in making the determination. Note that while the language of the code requires an organization to be organized and operated exclusively for charitable purposes, the term has been interpreted to mean primarily. The regulations state that an organization will be regarded as operated exclusively for one or more exempt purposes only if it engages primarily in activities which accomplish one or more exempt purposes, and only an insubstantial part of its activities is not in furtherance of an exempt purpose. In Better Business Bureau versus United States, the Better Business Bureau sued for a refund of Social Security taxes, claiming that it was organized and operated to educate people about ethical and responsible business practices, a primarily exempt purpose. Although the Supreme Court agreed that the education was an exempt purpose, it found that the Better Business Bureau also had a second purpose, to promote a profitable business community. Because promotion of profitable business is a purpose of a business league and not an educational organization, the Better Business Bureau was not operating exclusively as an educational organization. The court observed that the presence of a single non-educational purpose, if substantial in nature, will destroy the exemption regardless of the number or importance of truly educational purposes. 501c4. Social welfare organizations. Code Section 501c4 applies to civil leagues, social welfare organizations, and local associations of employees. The term social welfare may overlap with the term charitable, but it is broader, potentially encompassing organizations without completely charitable purposes. To be operated exclusively to promote social welfare, an organization must operate primarily to further the common good and general welfare of the people of the community, such as by bringing about civic betterment and social improvements. An entity seeking exemption under 501c4 must file an application for exemption on Form 1024A and give notice to the IRS of its intention to operate under 501c4 within 60 days of formation. Like all entities exempted under 501c3, 501c4 organizations are exempt from federal taxes. A 501c4 entity must operate to promote the general public welfare. It may not benefit a private company or individual or serve a select group. As with 501c3 organizations, the 501c4 entity may not operate as a social or recreational club or carry on its business like that of a private for-profit company. Unlike 501c3 entities, 501c4 organizations are not authorized to accept tax-deductible contributions, and donors may not deduct contributions to these entities on their income tax returns. While 501c3 organizations may not engage in political activities or substantial lobbying, 501c4 organizations may support specific legislation and lobby for matters that are of interest to the group. However, the group may not take part directly in individual political campaigns, and public advocacy must not be its primary purpose. The American Association of Retired Persons, the AARP, for example, is a 501c4 that may lobby for legislation on behalf of its members. A division of the organization known as the AARP Foundation is a 501c3 that receives federal funds and, as a tax-exempt charity, it may not attempt to influence legislation at all. If a 501c4 organization does carry out lobbying, the IRS requires it to disclose to its members the percentage of its dues or income that it devotes to that purpose. A primary area in which the IRS looks closely at the records of a 501c4 is in the area of fees and compensation, in search of excess benefit transactions. An excess benefit transaction may be a grant, loan, payment of wages or benefits in which a person or group earns money from a nonprofit in excess of the value of services rendered. Such transactions are subject to federal income tax. Other exempt organizations. Most organizations seeking exemption under sections other than 501c3 or 4 will apply for exempt status on Form 1024. Some of the more common organizations exempt under code sections other than 501c3 or 501c4 include 1. Social and recreation clubs. Section 501c7 grants tax-exempt status to some social clubs organized as not-for-profit entities and operated for the enjoyment or recreation of their members. These can include fraternities and sororities, country clubs, dinner clubs, amateur sport clubs, yacht clubs, and hobby clubs. The chief benefit for a 501c7 tax-exempt club is that it does not pay federal taxes on its day-to-day member-related activities. Social clubs can run members-only events, operate golf courses and swimming pools, build and maintain clubhouses, and encourage hobbyists. 501c7 tax-exempt social clubs do not need a charitable or social welfare purpose, but they must provide an opportunity for personal contact among members, and membership must be limited. In addition, the club's governing instrument may not contain a provision that discriminates on the basis of race, color, or religion. The majority of a 501c7 club's money must come from membership fees, dues, and assessments, and a substantial amount of a 501c7 entity's activities must further its exempt purposes. Such income is not subject to income tax. Up to 35% of its gross receipts may come from non-member sources, including investment income, and no more than 15% of gross receipts may be derived from non-member use of club facilities and services. Operating outside of these safe harbor rules could cause a club to be subject to taxation or lose its tax-exempt status. The benefits of 501c7 tax exemption flow to the club, not to its members. Donations to the club, including dues, are not deductible as charitable contributions on the members' tax returns. 2. Labor, agricultural, and horticultural organizations. Labor and agricultural unions may seek exemption under Section 501c5. Famous labor organizations like Unite Here, the United Auto Workers, and the Teamsters all have 501c5 exemptions. To be exempt, a 501c5 entity's earnings may not inure to the benefit of any member. The purpose of the organization must be the betterment of conditions of those engaged in the pursuits of labor, agriculture, or horticulture, the improvement of the grade of their products, and the development of a higher degree of efficiency in their respective occupations. A 501c5 organization may take part in political activities, so long as that is not its primary activity. In addition, it may lobby for legislation pertinent to its members as its primary activity within its exempt purposes. However, it may not participate in or support political campaigns. The entity may be required to either provide notice to its members regarding the percentage of dues paid that are applicable to lobbying activities, or pay a proxy tax. Dues paid by members are often tax deductible, but as a business or trade expense rather than a charitable contribution. 3. Business leagues, chambers of commerce, real estate boards, etc. Business leagues, exempt under Section 501c6, include trade associations and professional associations, which typically promote better business practices and methods, establish and maintain integrity within an industry, or operate a trade publication to benefit an industry. Some 501c6 organizations provide educational programs but are often geared toward promoting the business interests of particular companies. Section 501c6 organizations must not be organized for profit, although their members may include for-profit businesses, and no part of their net earnings can inure to the benefit of any private shareholder or individual. The organizations may engage in political activity and lobbying that is germane to accomplishing its exempt purpose without jeopardizing its exemption. However, the organization is required to give members notice of dues used for such activities or be subject to a proxy tax on the amount of the expenditures. Chambers of commerce and boards of trade are organizations of the same general type as business leagues. They typically direct their efforts at promoting the common economic interests of all commercial enterprises in a trade or community. For example, the National Hockey League is classified as a 501c6 organization, as was the NFL until it dropped its tax-exempt status in 2015. The purpose for this classification is to promote common interests, in these cases, hockey or football, and not to engage in a regular business of a kind ordinarily carried on for profit. Although the NHL as an organizing entity is exempt, the teams within the league are not exempt and do pay taxes on their profits. In our next module, we'll focus in more detail on charitable organizations, including, for example, the procedures for applying, the activities they may engage in, and their reporting requirements.